Now, Africa's infrastructure challenges are well documented, from energy supply shortages to inadequate transport networks and a lack of digital infrastructure, to name a few. And addressing these will require substantial investment. This is something that policymakers, business leaders and innovators paid close attention to at Standard Bank's Africa Unlocked 2025 conference. On the sidelines of the event, Bronwyn caught up with Boitumelo Mosako, CEO of the Development Bank of Southern Africa, and put it to her that not only does the continent have an infrastructure problem, but also an infrastructure funding problem. Here's her response to that.
I think the challenge we have is the gap, because the opportunities are there. The funds are also there. When you look at the strength of institutional capital, specifically on the African continent, it's there. Institutional capital globally is also there. The issue is then how to enable the flow of this capital, and I think that's where the opportunity lies as well, to realize and close the infrastructure gap. I mean, when you look at how us as an institution have developed investment programs, sector investment programs to actually enable the flow of this capital, whether you are talking an energy program, whether you're talking a transport program, whether you're talking a water program. These are the programs that we design so that we can enable the flow of the capital to close the gap. And another thing is also looking at instruments, that we then create. I mean, if you look at, for example, the infrastructure fund, that was created as a blended finance structure to enable the implementation of social infrastructure, and that has done well in developing a pipeline at the tune of about 100 billion or so. So the mechanisms are there, and as an institution, we focus on ensuring that along the infrastructure value chain we provide the necessary support, whether at planning stage to ensure that there's a bankable proposition, whether at preparation stage, because we provide project preparation as an institution to de-risk the projects so that we can catalyze the necessary funding. In addition to that, working on guarantee products as well, and these are things that we are also going to be focusing on in future, so we can mobilize the funds. And I mean, we as an institution, mobilize funds from all over the world, different types of funds. We have a debt program on the Johannesburg Stock Exchange. We raise money through bilaterals, and we also raise concessional funding, because as a development finance institution, our interest is that when we implement the infrastructure, yes, we're going for access, there must also be affordability, and in addition to that, there must be sustainability. So there must be climate resiliency in the infrastructure that we implement, and we ensure that when we structure these projects, we enable that, because at the end of the day, the consumer, it must be affordable to the consumer.
Because the projects can't just be on the promise, right? We have to move towards a space where these projects can really show the returns that are going to be generated, the impact that's going to come as a result of it. Is there just not enough knowledge on how to make these projects attractive in that way, to attract the capital? I know you said a lot of work is being done to help in that regard, but there's nevertheless still this gap that we're finding between the needs that are there in terms of infrastructure and actually getting the capital to it. Is there low-hanging fruit in terms of some of the quick wins that can be made to open those taps, get that funding into the projects? Or is it really a case of, at the start, we're having to go back to making sure that these projects are really delivering to potential investors, potential banks, potential capital distributors, to make sure that what we're putting on the table, like I say, is not just a promise. It's not just this is what we hope it's going to do or to solve, but we actually have to start getting back to the data, to the planning part of it.
And I think when you look at our history in South Africa, I think our government has done exceptionally well, you know, in terms of support through policy certainty. And I think when you look at the progress that Operation Vulindlela has also created, I mean, you look at the IPP program and the amount of capital it actually unlocked, and strengthening our energy security as a country, you know, and it was actually enabled by policy certainty from the state. You know, when you look at, for instance, the PSP program that we're going to be implementing together with the Department of Transport. When you look at the energy legislation, that the regulations that have changed on generation now, where people can generate their own energy as well, and I think those are things that you know we need to reflect on and actually say that, you know, the state is actually doing its part to create that enabling environment.
I also want to touch on this week the China Development Bank and the Development Bank of Southern Africa sealed a 5 billion rand loan agreement. How significant is a move like this, a tie-up like this? I'd even go so far as to say a partnership like this.
I mean, we, you know, as the DBSA, as part of BRICS, we are part of the interbank mechanism, and we are also part of the International Development Finance Club, which China Development Bank is actually a part of. So within that club, there's different development finance institutions from different geographies. So we try as much as possible to collaborate, you know, along all fronts, whether it's facilities, whether it's concessional funding, whether it's partnering on technical assistance, whether it's research and development as well. And this is something that we do with DFIs, whether it's KfW, whether it's the venture, you know, these are the relationships that we have with other DFIs. And with the China Development Bank now, we have signed a facility that will be supporting our infrastructure projects, funding of infrastructure projects across various sectors that we support, in energy, in water, in transport, and in digital infrastructure as well.
Put it into perspective for us. 5 billion rand, is that a lot in terms of infrastructure? Is that rather a drop in the ocean? Is this just a start? Because, you know, 5 billion rand sounds like a lot to me, but
it sounds like a lot, you know. But when you look at the need, it is you know, I mean, when you look at the need on the continent, we need on an annual basis more than probably between 120 and 170 billion dollars. You know, in terms of the gap that needs to be closed, and I think, you know, that's why we have these relationships, so that we can raise you know, the required funding. So I think, you know, when you look at the need, there's no ticket that's too small and there's no ticket that's too big, because the need is that big.
That was Boitumelo Mosako, CEO of the Development Bank of Southern Africa.